Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Sunday, January 14th, 2024, taking advantage of the 3-day weekend and posting this on Sunday instead of Saturday. I title this Technology Takes Charge, as tech stocks, small and large, certainly dominated the performance as the week grew longer. My email address is hgsidoc@gmail.com. If you liked this video, please hit the subscribe, hit the alarm so you get notified when I present these, or post these, I should say. And if you have any comments, especially constructive ones, positive or even negative, please post them either on the YouTube channel or email me. I'm trying to make these work for the audience, so if you have suggestions that I can do things better or differently, please let me know. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. I am a doctor, not a broker. I'm independent. I have the luxury of speaking at the Wealth 365 event, but I am an independent educator. I have products in Wealth Charts as well as other platforms such as TradeStation and TradingView. Tools I demonstrate are tools that I use every day in my trading, and I pay for Wealth Charts and I pay for my other platforms. Spoiler alert for those going to Wealth 365 starting on Monday, which I'll talk about, there's going to be a vehicle where you can get Wealth Charts for free. Wow. And trading involves risk, and you alone are solely responsible for any investment decisions you make. So, speaking of Wealth Charts, I'll be speaking on Friday. I'm going to look at my calendar right now and tell you the time. I think it's at 10 a.m. Eastern Time on Friday the 19th. I'll have an hour to talk about how I use Wealth Charts, top-down swing trading, and my special tools that we've created, some of which come as part of the basic Wealth Charts package. I will put in the remarks section below my video the link if you're one of the few people left who trades that has not yet signed up for the event. If you like this video but you're thinking, oh, I just wish he didn't talk so much, many days, not all days, I'll post something by 9 o'clock at stocksanddocs.com. It's typically 5 to 10 minutes, not an hour. And if you fill out the little box in the lower right hand corner, you will get notifications of when I post them. Major markets continue to tell a story, and if you look over here and you look at what's come up to the top, so the best performers over the last week, but you'll notice here the Qs were up 3.2, the NASDAQ was up 3.1, and look at this, FANGs, this is a triple thing, so discounted a bit, 3.7, but somewhere we're going to see that the IBD 50 was up 3.9%, small cap growth, which has been dormant for a long time. So this was a tech growth and tech related week with the 50, the FANGs, the Qs, and the NASDAQ all outperforming. Now the laggard on the week, but which was relatively flat, was the Russell. And you could see that Friday was not a very strong day. It's mostly a mixed day. So we'll dive deeper into this. And natural gas, which I like to say has been dead to me for a while, had a nice rally of 16.8, but it's still 45% off its 52-week high. From a sector performance, and this will be the S&P 500 makeup, financials, materials, energy, and utilities lagged. And you could see technology just blowing everything away, up 4.4 over the 5-day period. The Q-Edge tools tell an interesting story. Start up at the top, and you could see these little pies. And you could see that on Friday, a third of the stocks in the S&P 1500 were above the midline of their Bollinger Bands. 2/3 were below. That was relatively stable. That is a weak market. So overall, we still have some weakness in the market. I like to see the green over 60, not the red over 60. If we look at Friday, you can see 2/3 of the sectors were down, a little bit over half the industry, and half the stocks were down. So a very mixed session. When you look over here, and we'll talk more about buckets later, but when the large numbers are red, that tells you that you have stocks between the midline and the lower band of their Bollinger Bands. 5.7 are below, 4.3 interestingly above, and those are both modest numbers. When we look at the sectors, industries, and stocks over the last month, strong. The last 2 weeks, the markets have weakened. And now, but if you look at the last 5 days, we're seeing some strength coming back in. So maybe this little pullback that we saw, which we talked about last week, I'm not sure if it's over yet, but maybe it's getting to the point where it's going to be less negative than it was. And think about the first couple of days of the year. This is the Q market breadth. There's so many things I get from this, but what I wanted to concentrate, the pink line here tells me growth was doing better than value, and then you could see here in the blue line, small caps are still underperforming large caps, but we did see the 50 perk up. That's the big signal that I saw this week. If we look at the Nick Drendel one-day market worksheet, you could see modest performance on Friday. In fact, we really closed in the bottom half of the range, which I don't like to see. We're still above on the Q, spiders, and diamonds, their major moving averages. When we look down here at new high, new lows, you could see still doing fine on the NYSE, but we're starting to have more new lows pop up on the NASDAQ. And again, how does that make sense? And I think some of the small cap NASDAQ stocks really did pull the NASDAQ down, despite the fact the number was so high. But it's a hypothesis. We are seeing more lows than highs looking over the last month. Now, if you look at one-day change, gold, oil exploration, energy, and metal mining did well. But when you look at over the 5 days, these were all laggards. The leaders over the last 5 days, cybersecurity at 7.2, software 5.7, internet 4.5, and semiconductors 4.1. And I think you can understand my comment about how technology is back in charge. Now, the other thing that I thought was interesting is home builders were up on the week 2.7%, but I think we started getting some questionable earnings on home builders, and they sold off at the end of the week. In fact, we're down 1.5 or over 1%, around 1% on Friday. We had CPI stronger than expected, PPI that was weaker, employment neutral, and as you could see before I flip this, the rates actually came down a small amount, more on the 10-year than on the 30-year. Now, I do think it's interesting that on the 10-2 yield curve, it's close to the area where it's going to uninvert, or revert maybe is the right word. And that's interesting because recessions occur when that happens. Now, it'll be interesting to see. Now, the 10-3 nowhere close to that area. And, I'd like someone to show me where we have the end of a yield curve inversion and we don't see the gray bar occurring typically after that resolves. And the gray bar represents a recession. So I think all the talk about do we have a recession or not have a recession, it's all elementary. We're going to have a recession. We always do. At some point, the question's going to be when. On the bottom, there's no sign of credit tightness, and the Philadelphia Diffusion Index, a measurement of economic activity, is above -20. And recessions don't usually start when you're above -20. And credits typically tightens as you go into a recession. So I'm in the camp that yes, we will have a recession, but no one knows when, and my guess is whoever wins the election is going to have to deal with a tough economy after they take office. Breadth eases off the high. You can see stocks above the 200, stocks above the 40, both ease, but they're still at high levels. And the T2121 dropped off of high levels. Now it's interesting, so this tells me I have less stocks less new highs than new lows over the last 3 months. But the S&P actually turned up um, after just a teeny weeny drop from this level here. Buckets, I told you I mentioned these again. Here you got 2/3 of the stocks below the Bollinger Bands, and again, the preponderance of stocks to the left. If we are so oversold that a bounce is imminent, you're going to see the stocks below the bands, which would be this less than zero, getting up to 30, 40%. And if we're so high that we're going to come back down, you'd see the same thing on number of stocks above the greater than 1. We don't see that. Again, this is on the S&P 1500. Now, this one did interest me a little bit. I love looking for Hindenburg omens. These are old wives' tales to some. To me, they're a sign of market turbulence, and there has not been a major market correction that has not occurred without a preceding Hindenburg omen. Now, the problem is 1 out of 4 Hindenburg omens is a big deal. Most of them are just sideways corrections, and some are nothing. The typical Hindenburg omen is calculated on the NYSE, and you can see the NYSE is still healthy. More new highs than new lows less than 2% going back to November 13th. And you don't see a yes in this column. But look at what happened on Mr. NASDAQ on Thursday. 3.15% new lows, greater than new highs, and they actually met the criteria for a Hindenburg omen. Now again, classically, the NASDAQ is not considered part of the determination of the Hindenburg omen. However, if what the Hindenburg omen signals is a market top with the professionals selling to the amateurs, meaning us, and I see it, I pay attention to it. Now, what do I do with it? I'm going to look for confirmation. You need to see another one within 30 days or else it's spurious. Just thought it was interesting. And you could see it's a tale of two markets. The NASDAQ looks totally different. And remember the NASDAQ, when you add the advances and decliners, you're talking 3,633 stocks, give or take. There's a lot of stocks in the NASDAQ, not just the technology. Growth leads higher. So this one I take all the stocks and I use a universe of $2.5 and 250,000, which below that I don't usually look at buying. And I run them against ERG. ERG is a combination of EPS rank, relative strength rank, and group rank. Although growth has not been the winning answer forever, I am a growth stock investor and I want to see a curve that looks like this, where the higher ERG stocks outperform on the week than low ERG. EPS rank, higher EPS, outperform low. Higher relative strength, outperform low. There was also higher group ranks, outperform low group ranks. Haven't seen many weeks that look like that in a long time. But in rip-roaring bull markets led by technology and growth, this is a very typical curve, although it might be shifted higher with even the lower ERG above zero. To me, this is healthy. Know your news and earnings dates. Probably not the heaviest on news. We've gotten through CPI and PPI, so we have a beige book, jobless claims, housing starts, some sentiment. But what we have is a lot of Fed heads. And I'm going to comment in my market thoughts that the market seems to be pricing in several more rate cuts and faster rate cuts than the Fed is. So I'm going to think the job of those Fed heads is going to be either saying that they agree with market participants and they may have to be more loose in policy, which I do not think is going to happen, or much more likely they're going to say higher for longer. Not that there's more hikes, but they won't be ready to cut until they see greater evidence that inflation is resolving. That war between what the market participants are projecting and what the Fed that actually controls the rates, at least the Fed rates, are projecting, could lead to some turbulence. We do have earnings kicking up. Now, typically Netflix is after the Monday holiday, but it might be hiding here. I didn't see it, so I'll have to go check. So maybe Netflix is next week. Netflix, for me, typically kicks off the technology, and Netflix has historically had some big first quarter moves, although I'm not sure the seasonality is relevant today as it was in the past. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And let me just go back to that last comment. I do believe in seasonality. Netflix, as a younger company, was my go-to seasonality play, where it would have like 18 out of 19 years around this first quarter earnings. It would be higher, as much as 10% on average, almost every year. The last couple of years have been more choppy. I don't know if it's because Netflix is no longer a small company and it moves slower, or if its seasonality is less relevant. But the reason why I always thought that first quarter Netflix did so well had something to do with all the devices that we would get over Christmas time and how many people actually would sign up for Netflix. So markets closed higher, 10th week of gains at 11. S&P actually got above its all-time high. The Dow has traded recently above its all-time high, as has the Nasdaq. The one laggard now is the Russell. Again, mega cap tech outperformed. The Nasdaq was up good as well. The Spider large caps up 1.8%, and the equal weight was up 0.2, so the cap weighted certainly outperformed. Technology really dominated. IT up 4.9, communications 3.4. Energy had the steepest decline. Mixed economic picture, which I mentioned. I also talked already about how, rate cut expectations. My model still's on a buy, but the Hindi on the Nasdaq continues to remind me that the markets are not without risk. So far, the earnings reports, and there haven't been many, some of the big banks, have been mixed at best. We'll get much more insight into the status of traded companies this week and going forward the next several weeks. And I remain mostly long, still have some cash. We saw a great run in biotech. It may have ended on Wednesday. The JP Morgan conference was great. Probably more transactions at that conference than I've seen in a long time. However, tech's had a big run. Labu more than doubled since I started talking about it. And when I looked at my buy watch this week, it's technology, technology, technology. Again, January 15th to 20th, myself speaking on the 19th. For those who like my tools, again, some of them are included at no charge in Wealth Charts. And there's also a scanner and some advanced tools that I offer for sale at that event. Those people that buy my tools, or those people that have already bought my tools, will get invited to a master class, which I do quarterly. Also, for those that have been to my live meetings, which I always get great reviews, and frankly, I have a great time doing my live meetings. I've been talking with the folks out in Orange County, whom I do my meetings with on behalf together, and we're looking at the weekend in June. That would be the weekend before Father's Day for a change, so we don't piss off our children and our families. And it would probably start the night of the 6th and end sometime on the 9th. More information to follow. If you're interested in knowing more about my live meeting, please reach out to me. I do historically have done 2 live meetings a year. I've been so busy with my day job that I really been doing just the one of late. But what I'd like to think about is, we'll see about doing the second meeting next year, but I highly recommend this meeting. Would love to see you join us. And that meeting's typically between $300 and $500 for registration. It's a low budget meeting. It's in a decent hotel, typically 20 to 30 people live. We break bread together. We commiserate about the market together, and it's just a great time. So reach out to me, htsidoc@gmail.com, if you'd like to have more information. Let's jump into Wealth Charts. Now, Rob alluded at Rob Hoffman, the proprietor, at the last Wealth 365 event, that there would be a new broker joining. You're going to hear all about that on Monday. What I didn't expect is if you had a minimum balance at that brokerage, and again, I'm not going to steal Rob's thunder, but I encourage you to go and listen. But with a nominal balance at the new brokerage, there's some you get free access to wealth charts. Again, I'm not wealth charts. I just can't believe how great of a deal that is, and I refer you to Rob. So Monday, the market moved up at the open and really closed at the high of the session. Tuesday, we gapped down a little bit and traded up and closed at the high of the session. Wednesday, we pulled back a little bit, traded up, and closed at the high of the session. Thursday was the weekday in the market. You could see kind of a evening star formation here. But interestingly, before the end of the day Thursday, we got back much of the drop. And Friday, we popped at the open and closed relatively flat. So if you look in toto on the week, let's just throw the weekly bar up, you can see it's a big positive bar. And we did get to all-time highs on the spider, but we backed off a little bit before the end. On the weekly charts, you could see how much we've come off the bottom. This line here was a trend line that goes back through the tops back to the 21-22 high of the market, which we've decisively broke out, tested, and are holding above. Notice how nice the 50 and the 200 have turned off. This is an anchored VWAP back to the 2021 highs. Strong looking market. Yes, those are red candles, but that was up 0.07. That one was down 0.04. This one was up 0.57, and obviously Monday the 8th was a strong day of the market, 1.43. So strong looking index there. We are getting, well, if we close through all-time highs on Friday and came back some, we're clearly at double top territory for the S&P 500. To see if congestion and pause at this level would probably be good. Q's similar pattern here at or about all-time highs, and again, sort of a little pause coming back to threaten this week. NASDAQ consolidating at, the diamonds at all-time highs. The Russell actually took out the top of this channel, and it's interesting when I stood back and looked at the Russell 2000, it became pretty interesting to me that what we were really was we had a big Darvas box here, and then when we look at more recent times, we've sort of been in a sideways motion as well in the Russell. But you can see the Russell took out the top of this Darvas box. False breakout failed, but it's holding right around the top. So I'd say the Russell's consolidating its big run up here as well. And right now, I'm not sure that that's not still okay. Volatility, this is the VIX. If we look at the VIX on the week, you could see the VIX on the week was down almost 5%. The dollar, which had a big gap down here, a massive gap down here, you can see the dollar is just consolidating sideways at a low level. A weak dollar is one of the things that I've been suggesting is partly of why the market has done well. On the commodities front, dollar was weak, so gold was up almost 1%. Silver also up even more, 1.78%. Got to get through that 50 and 200. Oil continues to languish below the 200. Tried to get up there and then closed near the low of the session. Natural gas, for whatever it's worth, is trying to break out here. When I look at natural gas, and one thing that's been interesting to me was how the ratio of oil to gas pricing got so high. And I'm not sure why I have to play with my colors there, I think, but I can see the dates up here, even though the date down here is kind of washed out. So somewhere around December 21st, oil to natural gas hit a very elevated level. So if we look at natural gas on the 21st, I guess it's no surprise that this is about the time that natural gas started to run. If we look at the 10-year, failed here at the 200, and again, this oil, the 10-year, and the weak dollar have all been positive for the U.S. markets. My weekly market timing model, which requires price above a WMA 30 period and the weekly bond goes green, this can be constructed in wealth charts without buying any of my marketplace tools. We are in a buy signal across. Yes, we're in a pullback on the Russell, but certainly spiders, Qs, and diamonds are significantly in the buy zone. Now, I mentioned last week the daily. I do look at the daily. It's very choppy, and I commented on the daily. Let me make sure I make this. These are weekly, so let's change this. Did I do it? All right. Very quickly, I want to just change the colors here because I noticed that since I just copied this over, when I changed this one to daily, I changed the other to daily. So I'm going to change the colors, green, and one more, green. There we go. And let's change this to daily. On daily, you could see that we did flip our daily bongos to red. Now both the spiders and the Qs are in buy territory again. And we're not far off on the daily on any of these. So I think this improved. To me, it was reason enough to start buying stocks middle of the week beyond biotech. Breadth, for a while we saw the equal weight spiders outperforming the cap weighted, and then the end of the week happened and the cap weighteds dominated. The same on the Qs. I like to look at TLT versus the spiders because and I'm not going to do it today, I've done it enough times in the past. If you go back to times of recession, you get a spike in bonds to stocks. So that's another thing that I like to look at to prove to myself, although I know we're not in a recession right now. I like looking at the S&P sectors on an hourly basis to get an understanding of what's leading. And boy, you can see some stuff here that we haven't seen in a while. I'm taking away biotech star. Biotech has weakened. Now, healthcare, taking away its star because it's weakened some as well. Look how weak staples are off the high. This is discretionary, even though it had some improvement on the week compared to the relative versus the spider. Underperformed. Utilities are weak. The big winner, and it's probably not surprising to any of us. And in fact, I believe I started my conversation with it. What am I looking for? Oh, I do this all the time, and then I freeze. Let's see, is it under objects? Yep. The big star here of late is got to be technology. So I'm going to put that star on here because now what I'm going to do is see how it moves during the week compared to that star. But to me, that is the star in the market right now. And you could see financials after earnings came out loses its star as well. Materials very weak. Communications like technology picked up. Energy weak. Financials weak. Industrials weak. Staples weak. Real estate's pulled back. Utilities weak. The relative strength is going to be healthcare, even with the sell-off at LABU at the end of the week, and technology. Then I go into my dashboards, and for those who have not watched this before, you may or may not like the beginning. Some people like the slides, some people would rather I get rid of them, and I toy with the idea. But in 15 minutes, we've pretty much diced, after I finish the slides, what the market's doing, what the leading industry groups are, and once I've done that, I'm able to really hone in on where I want to be playing. If we look at the S&P 500 heat map, now sometimes this is confusing, and it's confusing during earnings times because this heat map does not stop at 4 p.m. This heat map stops with the after hours. Now there's not much after hours on Friday, so it's no big deal. But I think the heat map looks mostly green. There are some clear sight reds. JPM, earnings related, other financials, Wells Fargo, Delta. We had some more airlines coming, was down 8.79% on earnings. United Healthcare and Humana payers were down as well. When I look at Wealth Scanner, it gives me a chance of taking, and those that purchase my marketplace, I'll make sure you get access to this if you don't have it. But I have a big list of ETFs. Some of them are market, industry group, sectors, and I rank them with Wealth Scanner, and it gives me a sense of the strength of the market, but also what's leading. So, big shocker, no. Cyber, internet, bonds up there is interesting. Bonds. Wonder that tells me. Communications. Surprised to see staples here. Tips. A lot of bonds make it up, and that kind of worries me if I'm a stock guy. More bonds. More bonds. That's bizarre. Insurance. A lot of bonds. Here's your TQQQ. So tech-related stuff outside the bonds is up at the top. Now, notice the numbers. The most you can get is 860. I've got nothing in the 800. So even though the markets had a decent week, even though they seem to be improving, this does remind me that we're not a rip-roaring bull like we may have been a couple days ago or a couple weeks ago. Hack being the leader, and you could see the run that Hack has had from back here in end of October, big move. And then internet. So now, am I bullish or bearish? I'm going to lean bullish, but I'm cautious. Where do I want to play? I think I already told you. Technology is where I want to play. Even you have Russell growth here, down here as well, and Spider growth. So I want to look at growth related. So I might be interested in technology. And then the other place I might want to look at is healthcare, and that's based upon that sectors that I looked at a few minutes ago. So I'm going to jump into the CAT scanner, and I really thank Rob and the team for fixing the scaling, because now I switch monitors and stuff. I don't have to be adjusting the columns. So that makes me very happy. So I have created a number of watch lists. Each weekend I do one, a large one that's called the Weekend Review, a smaller one that I call my combo list, which I distribute to folks that follow me. And so this looks at the market as a whole, and the leading stocks will come up to the top. I like buying pullbacks and uptrends, so I typically will change to that one. This is one of the scans that I'll teach you how to do in my master class. And I could start to look at the stocks that are leading. Now, another thing I could do is I could actually pull up technology, and I think I have a technology sector. Here it is. And these are the technology stocks that came up to the top. Several of them are on my buy watch. So, WIT, I always think of these guys as an outsourcing company. What a big move. Here's a stock that is well off its highs. It's a cheap stock. And look at what happened on Friday. A massive move on great volume. 4 dots. Gap, volume, breakout, and momentum. All bongos turn green. Look at the strength and relative strength in OBV. And my only concern here is the high-low jumps at 100. I saw that on a number of stocks. Now, when that's the case, I mean, 3 things can probably happen to this stock over the next couple of days. It goes to the moon. Unlikely. It goes right back down. That's certainly possible, especially if the market rolls over here. Or it does something like this, creates a flag, and then it goes higher. So typically I'll put something like this on my watch list, but I don't know if I'm going to chase it when it's this extended, and I'm going to let it declare to me which one it's going to do. My favorite is if they pull back some before they break out. CTSH, Cognizant, another similar story, although not quite as extended. You've got volume, 2 days in a row, breakouts and momentum. Bongos are good. Relative strength broke out, as did volume. It's at 90%. And I like CTSH a bit. a lot and it's well off its highs. Believe it or not, IBM makes the list. Believe it or not, because this used to be the market and now it's a whole different company. But look at this, a big run up, sideways, and a breakout. This triangle is one of my marketplace indicators called my EMS signal. It's a short acting signal, but it's a good signal. You can see what happened here. Got you out, got you in, a little chop, got you back in, but volume, breakout, momentum. Here coming out of a squeeze, relative strength and OBV are strong, and look at the new high, new low. I really like that chart. Hard for me to believe. Infosys, another one with a big breakout. In fact, two breakouts in a row, or two gap ups in a row. This one, I don't like where the gap finished, and it's also very extended, but boy, how powerful is that? Two big gaps in a row. It's an ADR, so gaps are natural. And this is one that I put on my watch list. Not ready to jump into it. Accenture, this made my list. Technology consulting, based upon how much my company pays them, I'm sure they're doing just fine. Big run up, pullback, and a breakout. Good volume, breakout momentum. Look at relative strength and OBV, not extended. It's only 77 on the high-low jump. Booz Allen, another one that looked interesting. Now this one has not run away yet. So it's doing a nice sideways move. It had a breakout in momentum, relative strength turned up. Maybe not yet, but this one is getting close. And this is one where I might draw a line. And a breakout above this line might be interesting to me. And, this is one of those stocks that's basically giant move up, sideways move, and waiting for a breakout. That's Booz Allen. I don't know if I looked at Genpact. I didn't because it's so far below the 200. Leidos is another one that looked interesting. Big run up, sideways move, and look at relative strength and OBV. So yes, in technology, there's already quite a lot of nice looking things. Now there's other things that have perhaps run some. Salesforce. I look down here, it's at 67%, so it's not too extended. I'd rather buy it on a pullback, but that one looks good. Palo Alto Networks, one of the strongest looking stocks in the market right now. Cybersecurity, hack, breaking out and looking well. So within the technology space, you can probably find enough to be trading on Monday, and I like those, several of these quite a bit. Now, semiconductors by themselves, the only one that made it here was Smart Global Holdings and big gap up. I'm not interested in that. Did I look at, I don't know if I did something for cyber, so let's see if I have a cybersecurity. Crypto, nope. All right, I'll have to build an ETF for hack. So let's go to my combo leaders list, and this is a filtered list of leading stocks. I build this from a number of sources, and it's typically where I do my fishing as the week begins. BK is Bank of New York, Carnegie Mellon. This is a bank that actually had good earnings, breaking out to recent highs, but it's off its previous highs. 100% on the high jump, so the same thing as mentioned before. Next Gen Energy, don't know anything about this, if this was earnings or news. Also extended, but what a nice uptrend that's in. We looked at WIT. ASC, over the last couple of weeks, the shipping stocks have been strong related to what's going on with the Houthi rebels. Nice gradual move up, closed near the bottom of the day. CCEP, Coca-Cola Enterprise, nice breakout here on volume. You can't see the volume real well. Upgrade to 79, that's 12 points away. That's a lot. Relative strength looks good. OBV's coming in. CCJ, the uranium stocks all look like this. Now, is this a breakaway gap and a new run? I wonder. Massive volume. Bongos look good. Relative strength and OBV. Again, the concern about the high-low jump and being extended. Cognizant we looked at. DHT is another one of those shippers. Hess Midstream is an MLP. We've talked about MLPs over the last week. I actually have owned one for a while. The one I own is ET, And why do I own these? Because it allows me to participate in energy. It doesn't do much, although it's in a beautiful uptrend now over time. But it pays an 8% plus dividend. And I've had this stock for a while. I'm not, well, I am kind of getting to retirement age. I am retirement age. I'm just not retired. But that's been a persistent dividend with a little bit of growth. Going down the list, YMAB is a biotech play that had a big move on Friday. A lot of these things got, the hype of JP Morgan. Some of them worked out better than others. There were a number of takeouts this week. YMAB looks interesting. I have to do some research, but massive volume, breakout momentum, relative strength and OBV looks good, and it's not overly extended. It is well off of its highs. Valero is another, I think of it as a refiner, but I wonder if it's more than just a refiner. Breaking out above the 17, which is above the 50 and 200, good volume, relative strength and OBV picking up. I'd rather see it clear this area, but it looks pretty good there as well. And now let's look at one of my favorite lists to look at, which is high relative strength growth stocks. Some of the leading growth stocks in the market, and I put this together each week after running my scans. I think it's called Jefferies. JS Weekly High Relative Strength. And these are stocks that make it to, these are typicalinvestors.com, ID50, IBD50, William O'Neill, Cancelam leader stocks. So there's Bank of New York, there's Cameco Uranium, there's Cognizant, there's Infosys. Apellis is a biopharma that's had a really nice run over the last several months. Still well off of its highs, a little bit of a pullback. And this is what I like to see and what I look for when I talked about some of these extended stocks. Oops, I must have done the wrong one. I want trend line. And, you break above that, I'm going to be interested. So I might want to watch this one this coming week. Big run up, a little bit of a flag. Brown and Brown is an insurance. KIE was on the list in the mid 700s. Still in a choppy market. I'm looking for things that have broken out. Acadia Healthcare. I thought this was a mental health facility stock. Breaking out of a prolonged period of chop here, may go back to test all-time highs. Getting extended. Checkpoint is in the hack cyberspace. Again, a beautiful run, reminiscent of Palo Alto. Datadog, I know we use them for security as one of the many companies that we're working with, kind of sideways consolidation. And then if we look at the FANG stocks, Meta at recent highs, look at this beautiful chart off of the lows around 80. Relative strength OBV strong, not extended. So let's just look very quickly, then we'll say goodbye. So Google, breaking out to recent highs. Amazon, breaking out to recent highs. Netflix with earnings coming this week at recent highs. Apple, a lot of cross currents on Apple. Apple's pulled back. Questions about the China manufacturing supply, topping of the phone cycle. Although they do got that new visor at 3,000 or whatever coming out that I'm going to have to buy. All right, and what have I missed? Netflix, Apple, Google, Apple. I looked at Amazon, so Facebook, Amazon, Netflix, Google. I think I got the ones. Can't forget Kramer's dog, Nvidia. Would help if I spell it right. Breaking out as well. So you could see the strength in the FANG stocks, and FANG is leading this. I did mention small cap growth had a good day, IBD 50, and you can see IBD 50 has been clobbered. At some point, small cap, well, they have been small crap, but at some point, small cap growth is probably going to break out and do something. I don't think they've broken out yet. And I think that does it. So there you go, 45 minutes, a dissertation on what I think the market's doing with the slides, and then my top-down approach looking at the markets, sectors, and then honing in on cybersecurity and technology, and then broadening it out to my combo list and the high relative strength list. There's a lot of good-looking charts. A lot of people like me to put up my buy watch list. I don't know why people ask, because I'm looking for different things you're looking, and not all these are actionable right now. And let me go to watch list so they all show up, not just the ones that have signals. And you know, ACMR is, I thought it was a healthcare stock. It's a semiconductor stock. Um, this one looks beautiful, breaking out, nice uptrend, and breaking out here. Relative strength and OBV look good and not extended. ARDX reminds me of APLS. Big run healthcare now flagging here. Be looking for it to break out. Make sure that wasn't a takeout though. I don't think so. Um, Guidewire, like so many of the software stocks, beautiful uptrends breaking out further. I've been in and out of Mercado Libre, and I like buying it. I mean, here's a fresh breakout near recent highs. Boy, um, a trade above this dash line looks very interesting. Look at relative strength and OBV moving up. Microsoft, forgot to look at them. Unlike Apple, Microsoft is doing very well. New is a bank that I like that's breaking out here, or financial. I'm not sure it's a bank itself. Health Peak, for whatever reason, a lot of the medical property REITs look good. These pay dividends typically, breaking out after being pulled back. And I think I have done enough to fully confuse you. Here's just another uranium breakout there. That one doesn't look as good, perhaps, as UEC and Cameco. So lots of candy here, lots of interesting stocks. I hope to see you when I speak on the 19th. I hope you have a great week. If you're a Wealth Chart subscriber, the Wealth 365 events, except for the ad-libbing that Rob does from 6 to 9 o'clock, 6 to 10 o'clock at night, the actual presentations are all archived, which is great in case you have to have a day job and can't watch them. And I hope you all have a awesome week in the markets. And thank you for coming.